There's lots of decisions to make when you're starting an e-commerce business, but one of the decisions is often overlooked. And it's not about finding suppliers, it's not about Facebook ads, and it's definitely not about picking the perfect logo. It's about getting the business structure right from day one. I'm Matt Byrne, a chartered accountant and the director of Day One Advisory. We work specifically with e-commerce businesses, and I see this mistake constantly. Successful store owners who've built amazing businesses, but set them up the wrong way structurally, and now they're stuck. Just last month, I had a client who'd been running their business as a sole trader. Second year in business, they were on track to make 400 grand in profit. Now, sounds great, right? Except they were about to hand over 165K of that to the ATO and tax. Had they structured it properly from the beginning, that tax bill could have been around 100K. That's a $65,000 difference, and that's just year two. But here's the bigger problem. Because they started as a sole trader, restructuring now creates a whole mess of capital gains tax issues that could have been completely avoided. So if I was starting fresh in 2025, knowing what I know about how e-commerce businesses actually operate and scale, here's exactly the structure that I would choose and why it makes sense specifically for online businesses. Before I tell you the structure, let me explain why e-commerce businesses have different needs than, say, a consulting business or a tradie. First, e-commerce businesses have the potential to scale really quickly and generate significant profits. I've seen Shopify stores go from 0 to 7 figures in their second year. When that happens, you want to be in the right tax environment. Second, e-commerce businesses use massive amounts of working capital. You could have 200 grand tied up in inventory at any given time. Unlike a service-based business where profits can be distributed out immediately, your profits often need to stay in the business to fund more stock. Third, many e-commerce businesses trade internationally. You might be selling to customers in different countries, dealing with different currencies, or maybe even setting up overseas entities. Some business structures handle that better than others. And finally, e-commerce businesses often have complex financial flows. You've got sales coming through Shopify, Amazon, or maybe eBay. You've got payment processes, inventory management systems, and advertising spend across multiple platforms. Your accounting needs to handle all of this complexity. So, here's what I'd set up. A company as the operating entity with the shares in that company held by a discretionary trust. Let me break down what this means and why it works so well for e-commerce. The company would be the entity that actually runs the business, it holds the ABN, registered for GST, and it has the bank accounts. It owns all of the inventory, pays the expenses, and this is where all the day-to-day business activity happens. But instead of me owning the shares in that company personally, a discretionary trust owns those shares. I'd be the trustee of that trust, or maybe I'd set up another company to be the trustee, but that's getting into the weeds a bit. Let me explain why this setup is perfect for online businesses. Tax efficiency. The company pays tax at 25% on its profits if it's a small business. That is significantly better than personal tax rates, which can go up to 47%. When your e-commerce business starts making some serious money, this becomes a huge difference. Working capital management. Because the profits stay in the company at that lower tax rate, you've got more cash available to reinvest in the inventory. This is crucial for e-commerce businesses that need to constantly fund stock purchases. Flexibility as you scale. The trust structure gives you incredible flexibility in how you distribute profits. Maybe in year one, you distribute everything to yourself because you need the income. But in year three, when the business is generating more income than you need personally, you could distribute some to maybe your spouse, some to children, or even retain some within a separate company at a 30% tax rate, provided you stay within the rules. Asset protection. The company structure separates your business assets from your personal assets. If someone sues the business, they're suing the company and not you personally. Your house, your personal savings, and your other investments, they're protected. International trading. If you decide to expand overseas, maybe having a company structure makes that easier. Other countries understand companies. They don't necessarily understand Australian discretionary trusts, but they get companies. Long-term planning. The company share structure allows you to bring in a business partner, which you couldn't do with a trust, and gives you the flexibility to sell the assets or maybe the structure on an exit. Now, I know what you're thinking. This sounds expensive and complicated. And yes, it costs more to set up than getting an ABN as a sole trader. You're looking at around 2.5 grand to get the company and trust established properly, plus some ongoing compliance costs. But here's the math. You only need to distribute about $16,500 in profit to break even on those setup costs through tax savings alone. For most serious e-commerce businesses, that happens pretty quickly. Another thing I often hear people say is, Can I just start as a sole trader and then change later when the business grows? Now, this is usually the way most business owners start. So technically, yes. But practically, for e-commerce businesses, it creates a problem. When you transition from a sole trader to a company, you're essentially selling your business to the new company. If your business has grown and now it's worth something that creates potentially a capital gains tax event. There are some concessions available, but they come with restrictions. Most importantly, to get the main concession, you have to own the shares in the company personally, which means you can't have the trust structure without paying some capital gains tax. So you end up with a suboptimal structure just to avoid some tax on the transition. It's much cleaner to set it up right from the beginning when the business has no value and there's no capital gains tax to worry about. So practically, here's what I'd do. I'd go and set up a discretionary trust first, then I'd establish the company with the trust as the sole shareholder. The company gets the ABN, it registers for GST, and it opens the business bank accounts. All the business activities go through the company, the sales, the expenses, inventory purchasing, everything. At the end of each financial year, the company pays tax on its profits at 25%. It can then declare dividends out to the trust. The trust can distribute those dividends to the beneficiaries. That might be me, my spouse, maybe adult children, based on what makes sense from a tax perspective in that year. If the business is growing and it needs to retain cash to purchase inventory, the company can just not declare a dividend. The profits stay in the company at that 25% rate. So essentially what I'm trying to say is that the structure you choose in the first few months of your business will impact every dollar you make for years to come. I've seen too many successful e-commerce businesses who are now stuck with suboptimal structures because they didn't get advice early enough. They're paying more tax than they need to, they don't have the flexibility to manage their cash flow efficiently, and restructuring would cost them a fortune in capital gains tax. If you're serious about building an e-commerce business, then investing in the right structure from day one is one of the smartest decisions you can make. Every situation is different. Maybe you've got specific circumstances that would change this recommendation. Maybe you're planning something unique that requires a different approach. That's why we offer consultations specifically for e-commerce businesses. We'll look at your plans, we'll understand your goals, and we'll design a structure that fits your specific situation. I've put a link in the description to book a consultation with our team. Otherwise, see you on the next one.